Welcome to The Explainer. All right, let's just jump right in because we've got a lot of ground to cover. Today, we are looking at a masterclass, a completely data-backed blueprint on how to build, scale, and actually keep long-term wealth, specifically looking ahead to the 2026 economy. We've pulled together the absolute best research from financial analysts, hard market data, and self-made multimillionaires to figure out exactly what it takes to get wealthy today. We're going to break this down into a really clear, highly structured wealth pyramid. And I promise you, by the time we wrap this up, you are going to look at your income, your time, and your investments in a completely different way. But first, let me ask you something right off the bat, and it's a serious question. Are you building your own dream or someone else's? Society kind of conditions all of us to accept just a normal life, average pay, maybe a vacation once a year if you're lucky. But the wealth landscape is shifting radically beneath our feet right now. Your life is moving on a trajectory, whether you realize it or not. And if you aren't actively, intensely steering that trajectory, well, the economic system is going to gladly steer it for you, and it's going to keep you exactly where you are. And if you need a reason to take control today, just look at this massive number, $6.89 trillion. According to the latest 2026 Global Wealth Report data from EduTap, that is the unbelievable amount of financial wealth emerging markets are expected to add by 2030. To put that into perspective, India alone is projected to contribute 2.37 trillion of that pie. We are literally witnessing unprecedented wealth creation right now. There's a massive pie being baked in the global economy, and the strategies we're about to go over, that's exactly how you make sure you get a slice of it. Okay, let's start at the bottom of the pyramid. Section 1, the foundation, escaping the drifter mindset. Look, before we even touch things like profit margins or index funds or side hustles, we have to fix the deep psychological hurdles that block 99% of people from ever getting wealthy. Elite wealth does not start with some lucky stock pick. It starts by escaping what self-made multimillionaire Mark Tilbury calls the drifter mindset. A drifter is exactly what the system wants you to be. They bounce from one job to the next. Maybe they try a random side hustle for a week, just kind of hoping to strike it big one day. They say they want to be rich, but they're trying to learn a language, run a marathon, and start a business all at the exact same time. They just totally lack obsession. The elite, on the other hand, they make a stark, singular choice to become obsessed with wealth building. They don't drift, they steer. And the ultimate consequence of drifting is pretty brutal. If you aren't building your own dream, then someone else will hire you to build theirs. I mean, read that again. It hits hard, right? Nobody is waking up in the morning thinking about how to make you rich. If you just float, your time and your energy will be harvested by someone who is obsessed with building their own wealth. You literally have to decide to become the asset. All right, moving up the pyramid, section 2, the middle layer, rules for long-term wealth. Once you've cured that drifter mindset, we transition into the tactical, daily financial habits that create unshakable momentum. Because as Outlook Money reports, financial independence is not about sudden breakthroughs. It's almost entirely about these 3 fundamental rules for long-term wealth in 2026. Number 1, pay yourself first and automate it. Seriously, set aside a fixed portion of your income the second it hits your bank account. Number 2, invest consistently. Wealth takes consistent, boring behavior, not emotional market timing just because a stock sounds exciting. And number 3, which honestly might be the most crucial, keep lifestyle inflation in check. When your income goes up, do not let your expenses rise to meet it. That third rule leads us perfectly into this insider concept from financial researcher Sahil Bloom. He calls it the margin of freedom. Your margin of freedom is the buffer you intentionally create between your reality, like what you actually earn, and your expectations, which is what you think you need to spend to be happy. Expectations are your single greatest financial liability. The 1% actively avoid lifestyle creep. They never, ever match an economic leap forward with a lifestyle leap forward. By doing this, they retain the ultimate leverage over their finances. So why is managing those expectations so absolutely vital right now? Look at this figure, 5.1%. According to EduTape's macro reporting, that is the projected consumer price index inflation for India in 2026-27. The cost of living is just relentlessly compounding. If you don't automate your savings and aggressively protect your margin of freedom from lifestyle creep, inflation will literally just eat your wealth in silence. Protecting that margin isn't just a smart tip anymore. It's a stark survival tactic today. Let's keep climbing. Section 3, the upper middle layer, active income and high-margin businesses. Okay, so we've got the mindset down, we've got the defensive habits in place, now we need the offense. A lot of people obsess over getting an extra 1 or 2% return on their tiny investment accounts. But as Sahil Bloom points out, the real leverage point is your earning power. We need to talk about where you should focus your energy to earn the absolute most in 2026. Data from NIORE shows the stark reality of the business landscape right now. On the left here, product-based businesses average about 15 to 30% net profit margins. You know, you're paying for manufacturing, shipping, holding inventory, the whole shebang. But on the right, service-based businesses are averaging 45 to 65% margins. The digital and service economy is just thriving right now because you are selling your expertise and your time, totally stripping out all that heavy overhead.
To really put this into perspective, look at this insider data on startup costs versus profit margins. Digital products, they require maybe 50 to 500 bucks to start, but they yield insane 80 to 95% margins. Why? Because the cost of goods sold is basically zero after you create it once. Bookkeeping or consulting, $0 startup costs with 60 to 80% margins. Compare that to something like commercial cleaning, which requires thousands of dollars in startup capital just to get lower margins. The takeaway here is incredible. It's like a cheat code. The most profitable business models in 2026 actually require the least starting capital. You just need high-income skills.
So what exactly are those skills? Based on data from AR Member and Mark Tilbury, here are the absolute best high-income skills you can develop right now. Subscription communities and digital product creation are huge. They leverage recurring revenue and those sky-high margins we just talked about. Video editing, dropshipping, and deal negotiating are also highly sought-after services. But here is the real secret. You don't need to be a pioneer here. Find someone who has a proven pathway in one of these skills and literally just copy their blueprint, skip their mistakes, uncover the cheat codes that are already working for them. But I do have to warn you, getting really good at these skills brings us to a somewhat harsh reality, which Tilbury calls the lonely chapter. As you put your head down to practice your new high-income skill, you're going to face this brutal, solitary period. You will very likely outgrow your old friends who just want to keep drifting, but you aren't going to be successful enough quite yet to hang out with the millionaires you're looking up to. It's this strange, lonely middle ground, and it's exactly where most people give up and just slip right back into being average. But surviving this chapter is practically a requirement to reach the top.
Which brings us to the top. Section 4, the peak. Elite investing and true freedom.
So let's say you pushed through that lonely chapter. Your high-margin business or your high-income skill is generating massive cash flow now. What do the 1% do with that cash flow? Do they go out and buy flashy cars just to impress people? No way. They reinvest it to buy true freedom using what Sahil Bloom details as the barbell approach. Imagine a literal barbell at the gym, with heavy weights on the extreme ends and nothing at all in the middle. You put the vast majority of your wealth, say 90% of it, into safe, simple, steady assets. We're talking market-tracking indexed funds, bonds, cash. Then you take the remaining 10% and you expose it to high-risk, high-reward profiles like startups or crypto. This is a massive tactical secret. You get exposure to huge, life-changing upside while completely protecting your downside. And that downside protection is absolutely critical for 2026. Ajutop's market reporting recently noted that the Sensex and Nifty actually fell 12 to 15% early in the year due to global volatility, conflicts, and foreign investor selling. Markets are always going to fluctuate. That's just a given. And that is exactly why the 90% safe side of your barbell strategy is completely non-negotiable. It preserves your wealth, and it gives you the peace of mind you need to capitalize on opportunities when everyone else is out there panicking. As you reach this peak of wealth, I really want you to remember this powerful mantra from Sahil Bloom: never allow self-worth to be dictated by net worth. Look, the very moment your identity gets tied to your bank account, you hand your emotional sovereignty straight over to those volatile markets we just looked at. Money is simply a tool. Above a certain level, the elite view money purely as a mechanism to buy back their time, fund their purpose, enjoy experiences, and maintain their health. It is not an identity. So, the absolutely crucial point we've learned in this explainer today is that wealth isn't a